The total market cap of cryptocurrencies touched $3 trillion for the first time this week. And ever since then, Bitcoin and the complete cryptocurrency market cap has been coming down considerably. Currently, it's at about $2.8 trillion according to CoinGecko. So in this video, we are going to take a closer look at the technical analysis for the total cryptocurrency market cap. There are a few concerns that I have noted. I would like to share that with you, and this could actually give us a strategy for the near future as well. So stay tuned to this video and find out where the total market cap for crypto could be heading, because this could indirectly mean that the prices of crypto could be heading the same direction.
Subscribe to watch more videos like this.
Hello friends, welcome to Crypto Bulls Club, your one-stop destination for all the technical analysis and news from the world of cryptocurrencies. If you are new, make sure hit the subscribe button, press the bell icon, and also share this video with your friends and family. If you want to discuss about Bitcoin, Ethereum, or anything under the sun about cryptocurrencies, head over to Telegram, join our family. The link for that is given in the description below. You should join this channel because I had raised this concern in our Telegram community, and as soon as I raised, within a couple of hours we saw a dump in the Bitcoin and other crypto prices as well. So Telegram is the place where you should be heading on to. Now let's jump on to the charts. So at this point of time, according to this chart, the cryptocurrency total market cap is close to $2.7 trillion. Okay, this is pretty huge, gains from the lows of about 1.759 trillion in September. The prices have actually gained more than 70% in about 60 odd days, in less than 60 days. Okay, so that is a pretty decent gain for the complete crypto space. But there are a few concerns. What are the concerns? The first concern is the RSI. The RSI gives us the strength of the moves that we have, and on the RSI, on the daily time frame, what we are seeing is a bearish divergence. What is a bearish divergence? A bearish divergence is when a price makes higher high but the RSI actually makes a lower high. So here what we can see is the price or the value went from about $2.7 trillion to the highs of $3 trillion, whereas the RSI made a lower high from 73 to 71. So this is what I am referring to. This is the lower high of the RSI and the higher high in respect to the price. So this is something which is a bit of a concern to me, but this is on the daily time frame. We were expecting a pullback, we have got this pullback, but the major concern comes to me when I go to the weekly time frame. Okay, on the weekly time frame we can see something which is a bigger concern for me right here. Okay, so on the weekly time frame, what we are seeing is obviously there is a bearish divergence, as we can highlight right here. The price made higher high and the RSI made a lower high. So this is a pretty big bearish divergence. This is something which is of a concern to me as well. But apart from this bearish divergence, there are a couple of other things. What are those things? First of all, the RSI right here is making a double top or an M pattern. Okay, an M pattern or a double top pattern is generally a bearish indicator. All right, so whenever we make a double top pattern, it indicates that a move to the downside is something that is expected. But we had about 6 or 7 continuous green weeks, right from the week starting 27th of September. We had 1, 2, 3, 4, 5, 6 continuous weeks which were green. Okay, so the one red week should not matter, but the concern is the RSI right here. One other concern on the chart right now is the form of this candle. Okay, this is an inverted hammer candle, which means that there is a lot of selling pressure coming right from the tops right here. Okay, when the price made $3 trillion, we saw it could not sustain there for long, and hence this is the long wick right at the top. This is not something which is so great. The opposite to this is a kind of an hammer candle where the buying pressure is so high that there is a long bottom wick. Here we have a long top wick. Okay, so the long bottom wick indicates that there could be a buying pressure right here. As we can see, from the March of 2021, the prices went from about $1.74 trillion to the highs of about $2 trillion. From there we saw a pullback. Then again here we are close to a $3 trillion, and we are seeing another pullback, and this wick or this candle pattern on the weekly time frame is not very exciting. One other thing is obviously the stochastic RSI. We use the stochastic RSI to measure the momentum in the market. Okay, the stochastic RSI here has formed a double top pattern as well. When was the last time it happened? The last time it happened was back in June and July of 2020. Then we saw a small pullback from the highs of about $394 billion. We got a small pullback of about 20%. Okay, if we see a small pullback of 20% here, where we could be heading, that is something important to note. We could be heading to the lows of about 2.4 or 2.39 trillion dollars. Now this is a very interesting level. Why? Because if we just draw a simple line over here, what we'll be able to see is the 2.4 trillion is actually a great support right here, as you can see on the weekly time frame as well as on the daily time frame. Earlier it acted as a strong resistance, quite a few number of times. Back in May of 2021 we went upwards, we could not sustain, then got a strong pullback. Then again we tried breaking above it in August and September of this year, and then again we saw a pullback. Then finally in the week of 11th of October we were able to move above it. Now is this something of a concern to me? In the short term this could be a concern, but in the long run this is actually good, because what it is actually doing is it had broken the resistance. Now it is coming down. If we test this support and treat this as support, then we can see a big bounce. This is extremely healthy from the long term perspective, right? Where we could be heading down, if not the $2.4 trillion mark, we'll see the moving averages. The first moving average, or the 20-week moving average, comes to about $2.07 trillion. Now if that is the case, if we get a pullback from the $2.07 trillion, that is another pullback of about 25%. Now a 25% pullback in crypto is something that is absolutely very common. You should not be even bothered about a 25% pullback in crypto, right? We can expect upwards of 30-35% pullbacks in crypto. Anything above 60% pullback is something that we should be concerned about. If we see a pullback to the 20-week, right, we already had this kind of pullback earlier, right, as we were discussing in the week of 6th of September when we tried breaking above the $2.4 trillion mark. We were not able to do that. We saw a pullback, and where did we come to? We came straight to the 20-week, which treated and gave it a bounce, and now we bounced above it, and again we are seeing a pattern which could lead to a downward correction, right? Mind you, this is a total market cap of crypto, which means it combines the values of all the cryptocurrencies, out of which I think Bitcoin has the dominance of about 43% approximately, if I'm not mistaken. It could be somewhere around those regions. Now one of the other important thing right now is that we are in a bullish territory. Okay, make no mistake about it. Okay, this is a bearish candle on the weekly time frame, but on the daily time frame we can see, right, it actually re-emphasizes the fact that the $2.4 trillion is extremely important. Why? It has acted as support here, as we can see on the 27th of October when we saw this pullback. Then it bounced above it, and it again reached the $3 trillion here in the past. As highlighted on the weekly time frame, it acted as a strong resistance, right? But make no mistake about it that we are in a bullish territory. If we quickly get the EMA ribbon, we are above the EMA ribbons on the daily time frame, which is actually good. We actually came down to the top level of the EMA ribbon on the 10th of November. Then we got a bounce. This is actually very good. Till that time we are above these EMA ribbons, we are actually very bullish. Okay, I'm closely watching this $2.4 trillion mark. If we go there, then of course this could act as a good bouncing level for the total market cap, right? So stay tuned to our videos, stay tuned to our channel to get all the real-time updates on the world of cryptocurrencies. If you like the content, smash up the like button, hit the subscribe button, and also share this video with your friends and family, because this is something which gives us a macro picture of what's maybe happening in the next few weeks and can help you build a strategy for the midterm. In the long run, there's no doubt that I am absolutely bullish. I still expect the Bitcoin price to reach upwards of $100,000 this market cycle, right? So there's nothing to worry if you're a long-term investor. If you're a short-term investor, look out for the total market cap, because this could give you some indication where the crypto market could be heading. So thank you so much for tuning into this video. Stay blessed, stay happy, take very good care of yourself, and please make sure you join our Telegram channel, because that is where we share all the real-time updates as well. So take very good care of yourself, stay happy, stay blessed, trade wisely. Bye bye for now.